Welcome to Mex Moves, our weekly podcast on Mexican business and finance. How are you, Eduardo?
Doing well, Damien. How are you?
I'm good. So this week, Eduardo and I will go through some of the main news. We'll look at some news from Arca, investing in refrigerator business in Argentina. We'll look at Nu getting its bank license. We'll look at Kavak raising some money, but a much lower valuation. And we'll also look at fuel theft between Mexico and the United States, which is a big business that the government's trying to crack down on. And then we'll end with an interview with Agustin Barrios Gomez, who is a private equity real estate investor, basically investing Mexican family office money in the US. And we'll learn from Agustin what Mexicans are doing with their money in the US real estate market right now. So let's start with you, Eduardo. Tell me a little bit about Arca Ventures.
Yeah, Arca Ventures, or the private equity arm of the bottling company, announced just recently that it participated in a round of funding from this Argentinian cooling equipment company called Sensify, which again shows how these northern companies have looked into the possibilities of investing in new ventures, maybe associated or linked indirectly with things that they know. In the case of Arca Continental, obviously, they are very interested in finding cooling systems that are more efficient, more digital, probably better operated from remote locations and things like that. So like other companies in Mexico, they do have this venture capital arm, and they made an acquisition in Argentina, part of a funding round. They don't disclose much detail, but it seems like they are innovating or trying to innovate with other partners and risking some of their capital into these ventures, either to incorporate them later into their operations or, like generally venture capitals do, exiting the business. So that was an interesting development of a company that we've been following through over the past podcast, and they're keeping themselves on their toes, investing and finding new venues to try to be more profitable or incorporate new businesses into their operating models.
Yeah, I think we've seen quite a lot of this going on from the venture arms of these big Mexican companies. Cemex has been very active in startups around logistics and building materials. FEMSA's obviously been active. I think they invested in Justo, among the online retailer. What we haven't seen, as far as I know, is any cash outs from these venture investments. They make a lot of sense. And of course, Televisa, using its advertising inventory, has invested in Voila, Clip, and a bunch of other companies. Unlike Arca, they're not putting in cash; they're putting in advertising. But they have about 10 to 15 sizable investments across the VC space.
Yeah, in the case of Televisa, the estimated value could be of this ad allegedly could be $300 million, which is not a small amount.
Yeah, and let's see how it evolves and whether
exactly.
they're able to cash out. One thing is how they hold these things on their balance sheet. Another thing is getting cash for them. On the subject of that, Nu, as you might have seen, seems to have got its bank license in Mexico after waiting a year and a half, a little bit less than people thought. That's obviously good news for Nu, although it's not the end of the process. It'll probably be at least another 6 months before they're fully operating as a bank. Now, unlike Revolut and some others that have asked for a bank license, they're already a SOFIPO in Mexico, so this won't have any impact. A SOFIPO is a sort of light bank that won't have any impact. In that 6-month period, the customers will continue to have their credit card and have their deposit account, which are the two main Nu products. Now, I think why are Nu doing this? I think it's their goal, as they are in Brazil, is to be the principal bank of customers. And in order to be a principal bank, you need to be a bank and not a SOFIPO, because bank helps you with payroll portability, so moving from BBVA to Nu, as it were, which you can't really do as things stand. And also, it gives them a bit more deposit insurance, a lot more deposit insurance, a couple $100,000 versus a tenth of that as a SOFIPO. That hasn't really been an obstacle to Nu growing its deposit base very successfully, but maybe long term their thinking is that if you want to play and compete with the top 5 banks, you need to be a bank. Now, the disadvantages are that there's more regulation, so it's going to be probably more costly to operate. Also, there's a tax, as I understand it, there's a tax quirk that if you're a SOFIPO, for the first 40,000 pesos of deposits, there's no withholding tax, whereas for banks there is. So new customers which is the vast majority that have under 40,000 pesos in their savings product, will now face a withholding tax, which probably News thinking is that wasn't going to last, but it might be a small disadvantage. Now, in the meantime, new numbers are pretty bad in Mexico, at least the numbers that they report to the regulator. They lost a lot of money, $150 million, roughly speaking, last year. But I think more worrying than the actual loss is they still have a negative adjusted margin, i.e., interest income minus interest expenses minus provisions is still a negative number. Then on top of that, they're paying all their operating costs. So the underlying business doesn't look that good, basically because they have a very high cost of funding. They're paying as much as 15% to people who hold their money with them for 90 days or so. And in addition to that, they have a adjusted non-performing loan ratio of over 20%, basically reported non-performing loans plus write-offs. And if you're losing 20% of your loans and paying 15%, it's a challenge. Now, obviously, News went through something similar in Brazil and was able to become such a successful and profitable bank there. So their hope is that they'll do the same in Mexico, even though Mexico's dynamics are a bit different. Cash is much more important here. So having a fully electronic product is perhaps more challenging in Mexico than in Brazil.
Interesting, yeah. They're offering a very high rate of return on deposits right now. Maybe that could also be problematic for them in the future, no?
Yeah, I mean, I think that their hope is that their operating costs over time, when they get to scale, will make them so much more efficient than the incumbent banks, the traditional banks, that they'll be able to offer good deposits to the customers and still be profitable. And to an important extent, that's what's happened in Brazil. They don't yet have the scale in Mexico to make that happen. And it's possible, and we've seen a little bit of this happening, that the incumbent banks will themselves begin to react and offer higher deposit rates. This is great. All of this is great which is obviously what we care about. It's great for the Mexican long-suffering customer.
Yes.
They're getting, sometimes I'm a bit sort of bemused by people criticizing Nu for offering great rates. I mean, I'm a customer of Nu, very happy. Credit card works great. And their interest rates are basically along with sort of Klar and Story, the best in the business, but it is a challenge for shareholders, even if it's great for customers. But
well, you got to remember, David, that there have been a few failures in the Mexican banking system that offer high rates, and in the end, people lost their savings.
Well, very few actually. I might question that a bit because, first of all, the EPAB insurance, covers
a large portion.
99.9% of the population are going to have less than a couple of 100,000 in a bank account. So they're all protected, and when Nu becomes a bank, it will be protected.
Well, some of the few that bank, I don't know. I can't think on top of my mind, but there have been a couple. Yeah, you're right. There are not that many, but there have been a few. And there's always been a little
very few people. I mean, even FAMSA, which went under, very, very few people ended up actually.
In the end, yeah, for the terms of population, percentage of the population, it's a small percentage of people.
So where you've seen issues in Mexico, of course, is with the non-bank banks, which don't have deposits, like famously Unifin, Credito Real, Alpha, but not with the
bank. No, what was the other one that was failed? Well, anyway, you're right. It's not a big portion of the population that's been taken on by these problems. So now Nu is very well capitalized, so that won't be.
I mean, they have equity of, I think it's $400 million in Mexico, so they're way over their regulatory limits.
Yeah.
And
we'll find out more if this banking license actually materialize in operating everything. We'll find out much more about their numbers because they have to report, as you said, no?
Yeah, they still report as a SOFIPO, which is why we have their numbers for last year. But there's additional disclosure as a bank. You're right. So on the subject of that, Eduardo, there was a good white paper and Bloomberg exclusive on Kavak. Both Bloomberg and white paper interviewed Carlos Garcia, the founder and CEO of Kavak. As most of you know, Kavak is the used car platform starting in Mexico, but now in Brazil, in Argentina. It's also in Turkey, UAE, Oman, and so it's but about 60% of its business is in Mexico. And in the Bloomberg and the white paper story, it basically said that they'd raised $127 million in new equity, and that gave with a valuation of 2.2 billion. Now that's a massive cut on the 2021 valuation, which had got all the way up to 8.7 billion.
Yeah, big cut.
Now it's still apparently the investors were SoftBank and GA, which were already investors in Kavak. So there were no new investors in this. And the goal was to unlock about $400 million in debt lines from Goldman Sachs and HSBC, because presumably they had covenants that you needed a minimum amount of equity to loans to release those lines. That's why they did it, because a big part now, but I think the dominant part of Kavak's business is actually lending against used cars. And I think about 70% of used cars that they sell, at least in Mexico, are sold with credit, which is a very new thing, right? Because traditionally you weren't able to get credit for used cars in Mexico, at least. So that's how they're making their money. But in order to access these credit lines, it's very capital intensive business, lending against cars. You need a buffer of equity for HSBC to lend you all that money. And that's why they've done it. Now, I think that from my perspective, I don't know how you see it, 2.2 billion is still a very impressive number. It still makes it one of the most valued non-public sort of startup companies in the region. I think the 8.7 was really
It was really
not
too
based
much.
on very realistic expectations for what the company could achieve. Although I did notice that despite that, Carlos Garcia in his interview said that he wanted Kavak to be $100 billion company. And he said, we're not chasing vanity metrics. We're focused on building $100 billion company. I mean, talk about two contradictory sentences in one utterance, right? Because saying you're $100 billion is presumably a bit of a vanity goal. Let's hope for them and their backers they achieve it. But we don't have access to the numbers, so there's no way to know. But they did back in 2022. Bloomberg Story said they burnt $86 million in one quarter. I don't know if you remember. They had when he was still driving well, they had Checo Perez as their
Yeah,
as their sort of marketing spokespersons, and so that didn't come cheap. And they opened up in all these countries. They opened up in Colombia. They opened up in Peru. They were in Saudi Arabia. I think my understanding is they've closed Colombia and Peru, and also Saudi Arabia's not on their website, so that seems to have gone. And they've slashed their workforce. But at the same time as cutting their costs and moving away from some of these expensive propositions, they've significantly increased the volume and the turnover of the cars. So the inventory turnover, which is really key to this business, of course, because it's very capital intensive, buying and selling cars. So it's a lot of it is about the inventory turnover is now 3.5 times faster, and that's partly because they have all this data that they can tell. If a Prius is going to move quickly, or if a Honda Accord is going to move slowly, then they adjust the price accordingly to make sure that these cars are being sold as fast as possible. So I think one of the interesting things about this deal is it seems as if it's straight equity, because we have seen quite a lot of companies. Clip might be an example where they talk about sustaining their valuation. In Eclipse case, sort of 2 billion plus. But there's often a convertible element, like a fixed income element, a fixed coupon element that enables them to achieve that equity valuation. This, in order to meet the HSBC Goldman metrics, my guess is that it's more like straight equity.
Interesting. There was no report on that facility that Goldman and HSBC gave them and how much they're paying interest rates on those loans. Is there?
Not that I can see.
Yeah, I wonder what the premium is for Kavak to borrow from those two large banks. But anyway, yeah, it's. I mean, the data that they have is impressive in that sense of what you just told us, Damien, in terms of how they know which cars are in vogue and they can turn them around quicker than others and adjust price. That's a very impressive business model, I would say.
Yeah. So what they've done is, instead of having a kind of one-off transaction with the customer, buying or selling his car, and then he goes and that's it. they've turned their customer into a kind of recurring income customer by offering him credit. So he pays the credit over 5 years and then, presumably then buys another car. So he stays a customer. They offer insurance. They offer warranties, not just, for 30 days or 90 days, but, forever at a given price with affiliate some mechanic shops. So they've been able to use the data they have and the customer access they have to turn each customer into a kind of recurring, profitable revenue stream. They talked about all their geographies being profitable by the end of this year. Well, again, we don't have data. There's a lot of kind of ambiguity on how people define profitability, but clearly they're moving in the right direction. Talking about valuation, Eduardo, I don't know if you saw that Banorte bought out Rappi's minority position in RappiCard. So basically, Rappi, the delivery startup based in Colombia, but obviously Mexico, I think it's its biggest market, had a 44% of this JV in credit cards, and Banorte had the other 56%. So they bought out the 44% for $50 million. That values the whole entity at $113 million. RappiCard has about 1.1 million cardholders. And that's interesting because we talked a few weeks ago.
That's right.
About Platacard being valued, was saying that it was valued at 1.5 billion. And it also apparently has about 1 million customers. And I think the average balance isn't too different. Both Rappi and Plata are relatively kind of high to middle income, 20,000 peso average balance. So one is being valued at 113 and another at 1.5. Obviously, Platacard is also being given a bank license. Also, they're still in the process of turning that into an operating bank. And so there's a lot of more optionality in that business. But I think that it's more likely than not, as I mentioned a moment ago, that there's a convertible element to the Platacard valuation that makes it difficult to compare apples to apples with the Rappi.
Card.
There's a lot of kind of manipulation, let's say, not saying in this particular case, of valuation numbers in order to get headlines, and it's always important to be able to kind of get to the bottom of it if you can, which is often is difficult because they don't give us that data to be able to do that. I think more likely than not, we saw that Banorte kind of effectively temporarily closed down their fintech, Bineo, which we talked about a couple of weeks ago. So now that they've taken over 100% of RappiCard, my guess is that they're going to fold everything into the bank. I think RappiCard had its own infrastructure, which was separate to Banorte, which was probably quite expensive. So I think there will be sort of synergies as they move it back into Banorte. And as I understand it, RappiCard is actually reasonably successful. They're break even. Their numbers have improved. So, and if they can take out some costs by being part of Banorte, it'll probably be a net contributor to the bank, which it hasn't been up to now. And Rappi got $50 million out of it. I don't know how much they put into it. It certainly hasn't been a big success, and it sort of marks the end of Rappi. I assume it marks the end of Rappi's sort of incursion into
finance.
Into finance, right?
Zapatero to zapatos, as we say here, no? The Rappi will continue to be the delivery, and Banorte will be the credit company.
Yeah.
All right.
And then there was another Bloomberg story. Bloomberg is definitely, from my perspective at least, your old shop, breaking a lot of the detailed business stories in Mexico. I think they have the biggest bureau here, which may partly explain that. The Mexican government has halted land-based fuel imports at the Texas border. And basically the reason apparently they're doing this, Eduardo, is to try and cut down on what you call fiscal. You can help translate as you're Mexican.
Huachicol fiscal. we were very creative in our language models. Well, I guess it's the fact that when you smuggle fuels, you avoid paying all the taxes that you do when you sell fuels in Mexico. I mean, remember they have these IEPS, which is the special production and service tax on these products, as well as IVA and all the others. So smuggling fuel makes a lot of money for those that do it. And yeah, you're right. They've been confiscating more and more of these smuggled diesels and gasolines. I don't know if you also saw that confiscation of a big 10 million liter diesel vote in the Tamaulipas Riviera, if we want to call it that. So I guess the government is cracking down on this smuggling of fuels into the country.
And I was doing some research. It's huge.
It is huge, Damien. It
So,
is huge.
according to Petro Intelligence, by looking at the gap between what the US exports to Mexico, which is registered, and what Mexico imports from the US, which is that gap is basically illegal fuel. So it's losing between YEPs, which is the gas tax, and VAT, it's losing about $8 billion a year. And that's about 40 to 45% of the total YEP's fuel tax collected is lost in this what you call fiscal. So it's a massive amount of money. And there are concerns in the industry that the government is also using this to crack down on legitimate private sector importers in order to favor Pemex, which also imports. So I also saw the press release that Valero, which is the largest importer, temporarily had its license, import license revoked, and Valero is about 10% of oil imports into Mexico. It's obviously huge, and they are the most negatively affected by this what you call fiscal. They and others, but especially them because they're the biggest. So you're cracking down on the players that are most affected by this, and are the ones that are complying with the rules. So apparently, in their case, there were some illegal smugglers basically falsifying Valero documentation in order to be able to smuggle as if they were Valero, but without Valero knowing. That's my interpretation of the Bloomberg story. But of course, if you stop Valero, then you're helping Pemex.
Monopoly practice, or well,
that's it. We managed to speak for half an hour without talking about tariffs.
we don't need to. Everybody talks about tariffs, Damien.
Exactly. Although I did see that they're going to put 20% tariff on Mexican tomatoes.
Tomatoes, yeah. You say tomato.
All I can say is I feel very sad for Americans not having tomatoes, because Mexican tomatoes are not having them as cheaply as they were having them, because they're, I think, the best tomatoes in the world.
I agree. And the Mexican government, like always, has great hopes of removing that tariff pretty shortly. So we'll have to wait and see. That's a story, never-ending story. We haven't seen the end of it, I'm sure. What a mess. That's my comment on that.
Terrific.
Well, it's a real pleasure to have with us today Agustin. Hi, Agustin. Agustin is the founding partner of International Capital Partners, ICP. It's mainly an industrial and commercial real estate fund based in Houston, with offices in Mexico. Agustin's going to talk a little bit about that in a moment. Agustin's had a colored life and career. I think it's right in saying you've been a federal deputy in Mexico, 2012 to 2015. You ran to be mayor of Miguel Hidalgo. You were brought up partly in the U.S. You were brought up partly in the U.S. Now live partly in the U.S., but you're Mexican and proudly.
That's right.
So great to have you here. Thank you.
Thank you for having me, Damien.
So let's start with ICP. Tell us a little about the strategy. What kind of assets do you focus on? And why should a Mexican family office, which I understand is your main target, kind of invest with you if what you're investing in is U.S. real estate rather than with a big kind of U.S. real estate fund like Blackstone? I mean, what's the point of giving money to a Mexican to invest in the U.S., to be blunt?
Well, it's obviously an American company, and we are 100% American. We have 90 properties now across 14 cities in the United States. We basically started about 8 years ago. We have a perfect track record for those 8 years, including during the pandemic when other funds, including some of the largest investment funds, stop distributing. We distribute in on time and on target. And so we found that we are capable of finding industrial properties in stable markets, mostly in the middle of the United States. What that means is basically the Texas Triangle, Colorado Front Range, and basically the Chicagoland industrial market. And we found a niche between $5 and $35 million where we're finding credit tenants, long-term contracts, and that's allowed us to give our investors, we have an investor base of about 300 people. We are worth $500 million now. And that has allowed us to be, to provide for their current income needs. We are a cash on cash driven fund. We are evergreen. And that sets us apart from a lot of the private equity funds It also insulates us from the movements of the financial markets. So whereas if you invest in a public REIT, one day the news might shake the foundation of your stock. In our case, no. I mean, we are 100% rock solid in terms of valuations. We're basically the option for living off your rents, right? The most complicated story for us to work through, especially when we deal with family offices in places like Monterrey that have a long history of investing in the United States, is to go through the numbers and show them how it is actually better to invest with us than it is to invest directly. If the classic strip mall that a family office in Monterrey might buy in San Antonio, in the best of cases, will actually give you about 6%. And that's before you add in the team that you need to actually run your investment. And so what we provide, we have 170 tenants in 14 cities in all the major industries in the United States. None of our tenants represent more than 6% of our income. And so from the first day you're getting income, from the first day you're getting diversification, and from the first day you're getting 9.5% yield. And to be honest, in terms of a value proposition, in terms of risk and reward profile, it is a very, very hard, unique selling proposition to beat.
And with Trump in power, are you seeing more or less interest from Mexican wealthy families in investing in US commercial and industrial real estate?
I think, and this is something that we've been very clear with our investors in. This is a vehicle for diversification. And if you manage a patrimonio, if you manage a wealth asset portfolio, one of, Asset Management 101 requires that diversification. By nature, international investors, whether they be Mexican, Chilean, Spanish, or whatever, they have concentration in the home country. You're talking about obviously the real estate that they generally have because of homes and whatever. You're also, the family business and all of these different things. So you have a natural concentration in your home country. In terms of what you are responsible for when you're managing wealth, you need that diversification. So you're going to have that, the private bank account with, one of the big name banks or whatever. You should also have 5 to 10% of your assets in alternatives. And within alternatives, we believe that it's very important for the investor to have ICP because it provides that income that is independent of the financial markets and that's set many years in advance. So our weighted average lease term, that is the average contract remaining across our 90 properties, is 6 years. And so, we have sometimes our investors come in and they'll say, hey, did you see that the market went up in Houston or down in Chicago or whatever? Your income does not depend on that. Your income depends on Northrop Grumman, Boeing, Amazon paying the rent. And those contracts, for anybody who knows anything about U.S. real estate, those are for a company to get out of a contract. We are right at the top of the capital stack. We are right at the top of receiving money from companies. That commitment is real. They have to file not only under Chapter 11, but I believe actually under Chapter 7 in order to get out of that commitment. So it doesn't happen. You have enormous stability within that. And in terms of our portfolio, we have 94% occupancy. We are renewing our contracts on time, and that has allowed us and is allowing us to meet our investors' objectives all the time.
Trump, in simple terms, wants big multinational companies to move operations back to the US.
Right.
And that's one of the reasons he's putting tariffs on exports to the US. Are you seeing evidence, in your US real estate business that people are kind of looking for more space, looking to relocate a bit to the US, sort of strengthen up their supply chains within the US and depend a bit less on Mexico or China, where it might be?
Yeah, the word is reshoring, as you know. So yes, our portfolio is mainly industrial properties. And so we see demand for our properties actually go up. So in terms of the prices of the properties that we have, that cap rate is going down. What that means is that the price is going up, right? We are seeing that certainly, but at the end of the day, there's an issue with respect to the fact in the United States you have almost full employment on the one hand. On the other hand, you don't actually have the manpower to fulfill the needs of those manufacturers in full. I believe that North American economic integration is something that is a done deal. Whether you're talking about what has been going on since the 1st of January 1994 that NAFTA came into effect, or you're talking about the USMCA, even with these hiccups in terms of in terms of protectionism coming back, I think that these production chains are still going to be integrated. So I was in Detroit on Monday. We bought a small portfolio of industrial assets for a German company called Webasto, and they manufacture sunroofs and roofs for automobiles, for OEMs, right, for these automobile manufacturers in the United States. They were telling us that what they're going to end up having to do is, because these are factories that are in the United States, obviously, in Detroit and in Lexington, Kentucky. That was what we purchased. But they were telling us that they have pricing power. So even their suppliers are from Mexico mainly, and even some from Canada and some from China. But they're going to pass those price increases on to their customers because there's simply no competition. Nobody else is willing to make these things, for the margins that these specialized companies have. So what you're going to be seeing is that you're going to be seeing these tariffs basically become like any other tax. Imagine that there was an increase in VAT in the United States, and you're going to see across the board increases in inflation for the amount of time that they're in force and for the amount of time that it takes the economy to actually absorb those price increases. What it means for us, at the end of the day, like I mentioned before, we're a long-term player. We're buy and hold people. We're cash on cash driven. We buy stabilized. We don't develop anything. So we're long-term buyers, and we are able to buy below market prices because we are actually the preferred buyer, despite the fact that we're generally the low bidder, because we have that reputation of closing on time and on target. And so what that allows us to do is to have these prime assets that there's a lot of demand for, and we believe that that's just going to grow.
Agustin, you grew up between Mexico and the U.S. You're bicultural by any meaning of the word. You studied your high school, prep school in the States as well as in Georgetown. How did this binational background that you have shape your views, and how do you perceive Mexicans, or how do Mexicans perceive, or have they changed their views of the United States over the past few years?
That's quite the question. Yeah, so my father was a very successful television personality during 30 years, running all the way up to the late 70s. And then he became ambassador of Mexico to Canada, ambassador of Mexico to Switzerland. So I lived in Canada 6 years, Switzerland 4 years, in the United States 6 years. My father was consul general in New York City. I've seen a lot of changes with respect to that. When I was growing up, Mexico didn't really see itself as part of North America. It now very much is a part of North America. And I can go through any number of statistics, whether you're talking about the fact that 1 out of every 4 international flights that leaves U.S. airspace, not Mexican airspace, U.S. airspace, the destination is Mexico. It's 25% out of 199 countries goes to Mexico. Whether you're talking about the most legally crossed border on the planet, whether you're talking about the fact that just the trade between Mexico and Texas, not Mexico and the United States, Mexico and Texas, is more than the entire trade of all of the countries of Latin America put together, combined. Everything that they trade with the world, not with the United States. So the amount of economic integration that has taken place between Mexico and the United States is unparalleled. In fact, these are the 2 most integrated countries on the planet, and I can go through any number of statistics that will back me up, whether it's 37 million Mexicans and Mexican Americans in the United States, out of which only 6 million are undocumented. 31 million are either U.S. citizens or legal immigrants, so it's a legal phenomenon, or whether you're talking about the fact that Mexico is actually the #1 destination for Americans living abroad by orders of magnitude. So there's between 1 and 3 million Americans living in Mexico, which is between 4 and 12 times more than second place Canada. Today, you will not find a family in Mexico of whatever socioeconomic level that does not have a family member that lives in the United States. On the other hand, you're seeing Americans who are much, much more interested in coming to Mexico. We are not only the #1 destination in general for Americans, we actually receive more American visitors than the rest of the top 5 combined. So there's really no comparison. And so what I've seen over the 40 some years that I've been exposed to this is an enormous amount of change in terms of that integration, in terms of Mexicans seeing themselves as North Americans and Americans seeing Mexico as intermestic, right? There's that phrase that's used in international relations, this concept of intermestic. The relationship is not international or domestic; it's intermestic, and you see that across the board. The new embassy here in Mexico City for the United States is the only place outside of Washington, D.C., where every U.S. government agency is represented. The only place. It's a billion-dollar building in Mexico City. And at the same time, Mexico has the largest consular presence of any country anywhere, which is the one that we have in the United States, 53 consulates by order of magnitude. I mean, all these numbers are really, really huge. And so that economic integration is perfectly natural. And in the context of investment, it makes perfect sense for Americans to be invested in Mexico, which they are, and for Mexicans to be invested in the United States. Again, that is diversification. Coming back to your point, and Damien, when the previous president of Mexico was in power, we saw a lot of fear on behalf of Mexican investors. They said, we need to go to the United States, and that's certainly, that's certainly true. But at the same time, it's not something that should be dependent on one person being president. This has to be a long-term strategy of diversification. This is the money that you can count on when financial markets are upended or when something bizarre happens at the at the federal government level in Mexico.
And getting back to this huge integration that the two countries are now in, whether they like it or not. In your experience, is Mexico understood by the U.S. community? Has it improved how Mexico works, or are they still largely decision making without the knowledge of what Mexico is and how Mexico functions?
So there is an element of bull in a china shop in terms of Americans not quite understanding what Mexico is, because Mexicans themselves don't quite understand what Mexico is. Because I think Mexicans and Americans make the mistake of not realizing just how big Mexico is and how important Mexico is. So Mexicans have a very bad tendency of they always punch below their weight because they don't quite get it, right? There's this kind of Cantinflas 1950s idea that Mexico is somehow small and rural, when in reality it's very big and urban. And we're constantly not understanding the importance of Mexico for the United States, and that manifests itself also on the American side. So the Americans also see Mexico often as being much weaker and much poorer than it actually is, and so they make mistakes. Right? There's the bull in the china shop, and we've been a part of that. We've allowed a lot, all of those images of the caravans arriving in the southern border, and all of those images of, and the fact that Laredo, Nuevo Laredo is the most important inland port on the planet, not in America, not in North America. It actually has more volume often than Long Beach, Los Angeles, and New York. You're talking about an inland port that has maybe $300 billion worth of trade. 16,000 tractor trailers go through that. And yet Nuevo Laredo, Tamaulipas, is a disaster. And so instead of taking advantage of the fact that we have this superpower of trade right next to, not next, integrated there, and it is actually, again, the most important inland port on the planet, no, we actually decide to, basically give it over to organized crime and all the mess that there's a lack of infrastructure. And these are the types of mistakes that Mexicans make that allow Americans to think incorrectly about the role of Mexico in North America. If there was any strategic thinking with respect to this, Nuevo Laredo would be receiving enormous amounts of investment. Same with Ciudad Juarez. Same with Tijuana. See, these should be showcase cities and not something that gives us pause, right?
So, what do you think CEOs of American companies or Mexican companies should do to improve the understanding of each other's country?
Well, the very first thing is that they actually need to understand themselves. What this integration, what North America is about. I have a lot of opportunity to talk to different people in conferences and stuff. And in fact, today I actually have one with a large group of business people coming in from the United States. And the first thing that they need to realize is just the scope of the relationship, so that they can talk with foreknowledge, with authority, with respect to what that means. And so being able to go back to, so for example, well, Mexico is a part of Latin America. Yes and no. Mexico is culturally and linguistically a part of Latin America. But there is nothing. I mean, there is not one single indicator that in any way parallels the level of integration that Mexico has with the United States. I think there are more direct flights to Houston than there are to all of the capitals of all of Latin America put together. I mean, the level of integration between Mexico and North America is completely beyond anything that can be compared to Latin America. And so part of that conversation has to come back, when you go to headquarters in New York, Los Angeles, or whatever, you're like, you need to say what it is, right? Mexico needs to be seen as part of the North American market and not part of Latin America. These are conversations that need to take place, but you need to know all of these different things, right? You can't pretend that you're going to have your headquarters in Miami and suddenly Bogota and Mexico City are going to be the same thing. They really are not at all.
Do you think Washington gets it?
I think there are a lot of people in Washington who do get it. So, I mean, I've been in those circles since I was in college, right, in Georgetown. In fact, I was there during the negotiation of the North American Free Trade Agreement, and I was at a think tank. That was my first job out of school before going to Procter and Gamble. We did all these things on the Hill. And one of the things that you realize is that people who are involved in the relationship, like really involved, like, even the trade negotiators, and even the people at the State Department and all of these different people, they end up having the same point of view as their Mexican counterparts. There's a teamwork effort because in the end, the bottom line is that what is good for Mexico automatically is good for the United States. More than a trading partner, more than anything, what the United States needs in Mexico is a stable and cooperative neighbor. Because at the end of the day, the U.S. has everything to lose. The U.S. is that superpower. They have the highest income. So they have a lot of things to protect. They have a lot of enemies, and so what they need from Mexico is stability and cooperation. And so in the end, you're going to be much better off with a prosperous Mexico than you are with a Mexico that's always going to be, on the knife's edge. And I think that in Washington, you do have a lot of people who understand that, and they come around to it.
Because it's interesting. In Mexico's case, you see the two last administrations, I mean, talking about the current one and the previous one, defending something that 10, 20 years ago, 30 years ago, they didn't want it to happen, which was North American Free Trade Agreement. Now, Claudia Sheinbaum and Andrés Manuel López Obrador are staunch defenders of this integration. They see that they can't unravel it, but the counterpart in the States, meaning Donald Trump, seems not to have realized how much each country depends on each other.
Well, I mean, the current U.S. administration is definitely a wild card. That's not just in terms of Mexico. That's in terms of the world and in terms of the United States. I mean, I think that after, with 248 years of American democracy are being very much put to the test, I think that in fact, I would actually argue that there are much bigger fish to fry than tariffs. This is a really big deal in terms of what's happening. And I think that the shakeup that's going on is much more fundamental than, whatever tariff of the day comes up. And so that's something that the world is going to have to, the more that I see, the more that I understand that in many ways, these are historical cycles. We're living in a time that actually parallels the 1930s very, very well. There seems to be all of these social dynamics that are underlying the stuff that's going on because, you're always going to have people like those who are in power right now. They're always there. They've always been there, right? That's not the important thing. The important thing is, why are people so supportive of this message right now? That's really the most important thing. And I think, a lot of these things are coming home to roost. I think, I've been a staunch proponent of communicating, North American economic integration since God knows when. And I think that a lot of people took it for granted. They took it for granted that reason was going to prevail. They took it for granted that self-interest was going to be evident. And I think that a lot of missed opportunities occurred because people didn't get organized and didn't actually, take it to Peoria, so to speak, to tell them that it was very much in their economic self-interest to have this North American economic integration. That you're not going to have, there's no such thing as an American car. There's no such thing as a Canadian car. There's no such thing as a Mexican car. These are all North American cars. The parts that make up those cars cross the border on average 6 to 8 times. But of course, with the UAW basically saying, "Oh yeah, we're happy about tariffs," they have absolutely. I mean, the leadership, they're being extremely cynical because they know perfectly well that their plants can't function without Mexican suppliers. That's just a truism. It's not something that's up for debate. That just is. And so I think, I think that there's been a lot of misinformation And I think that companies have allowed that misinformation to go on because they always believed that they were going to have people in government who were actually going to understand that it is in everybody's self-interest to have this economic integration. And now it turns out that that's not true. And I think people have been very sanguine with respect to those arguments, and that's coming home to roost, so to speak.
Agustin, I think we're run out of time, so thank you very much for coming here today. Good luck with the fund. Keep the fight for U.S.-Mexico integration. Keep the fight going. We'll come back on our podcast.
Absolutely. It's a pleasure to be here with you. Congratulations on the podcast. I'm a big fan. I'm also a big fan of white paper. And I mean, this is the time for that diversification. This is the time for finding those opportunities. And we believe that in terms of those opportunities as a private equity long-term investment, these ICP is hard to beat. Thank you very much.
Thank you, Agustin.
Okay, well, that's it for this week. Thank you, everyone, for joining Next Moves. I hope you tune in next week.
Thank you, everyone. Don't forget to subscribe, and we'll talk next week. Damien, thank you for your time.